2022 property predictions. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at this article from Yahoo Finance about 6 property market forecasts for 2022. What do you reckon, guys? So, property markets experienced a boom during COVID-19, with lockdowns doing little to cool the market and prices growing more than 22% this year. But Aussies are being cautioned to be more strategic about their purchase decisions over the next year, with property price growth expected to slow. So we're expecting them to slow. Australians experienced an unprecedented property boom in 2021 as households saved more cash and government grants and stimulus packages propped up the economy. Arjun Paliwa, head of research at InvestKit, said, expats returned and purchased properties. Lifestyle became a higher than ever priority. Interest rates remained low. Existing housing supply took a nosedive. And all of this whilst an infrastructure boom is in play. Here are 6 property trends for 2022. First, home buyer activity will decline. So, Palwal said he expected first home buyers applying for new loans would decline next year as a result of the extreme growth seen this year. As property prices rose to such high levels this year, many first home buyers have been priced out amongst major markets, he said. The biggest challenge for those looking to buy in 2022 and beyond will be their home deposit. Well, I mean, that's always the biggest challenge. The serviceability of a mortgage is much easier. If you just look at the serviceability, a lot of properties are undervalued. The biggest hurdle is buying a bloody property. The mortgage repayments are often less than your rent, even with increases of up to 5%. You know, it's still going to be cheap. You'll still find a way to do it. 2, prices will depend on demand rather than supply. The first wave of the property boom this year was driven by a lack of available property hitting the market, he said, and he expected this to change next year. Many areas carry a multitude of reasons for their respective cycles to continue. Localized strength in their economies, the continuation of the exodus, affordability, weaker last 10-year rates of growth, paving the way for a greater cycle length and high current market pressures, he said. These areas are expected to be the majority when counting the total number of cities in Australia seeing high demand. 3, the sea change and tree change will continue. While working from home and the flexibility work arrangements played a part in the sea change and tree change trend, Palawal said retirement plans being brought forward would be the biggest driver due to the aging population. The pandemic made people rethink their living situations and seek a better lifestyle sooner. We saw people trying different tactics to achieve retirement earlier by downsizing or investing, he said. It's not a new trend, it simply became supercharged during lockdowns. So, number 4, borderless buying will become the norm. Okay. He said consumers had become more comfortable buying beyond their backyard, and fewer were compromising on buying an apartment if they couldn't afford a house. He said growth across many locations had changed people's opinions on strong markets, traditionally considered just the big cities. The concept of virtual buying has been around for some time, but it has accelerated during the pandemic and through greater professional presence of buyers agents, making it easier to buy outside one's own city or state and ease buyers' concerns, he said. 5, growth won't occur at this pace again across all markets. Paliwal said that while 2021 saw a great deal of growth across the entire country, it was unlikely that would occur again. He cautioned buyers that they shouldn't get into 2022 thinking they could buy anywhere and see the same upward trend again. Each micro market will have its own factors influencing growth, he said. The last time growth occurred on a national scale in this similar fashion was 2000 to 2004. Whilst large amounts of growth did occur in most locations, not all carried on with the same intensity through the boom period. Buyers need to be strategic and look at the data to understand where markets continue at this pace. And 6, rent prices will rise. As international borders reopen and skilled migrant workers and international students return, Paliwal said apartment rentals would see growth. This is good news for investors who were caught in the apartment exodus and saw rents decline during that period, he said. However, the impact of lower rates of vacancies will see more pressure on rental prices. So there we have it. 6 predictions. First home buyers will decline. Prices will depend on demand, not supply. Sea change and tree change will continue. Borderless buying will become the norm, and growth won't occur at this pace again, and rents will increase. What do you reckon? They all seem quite reasonable expectations and predictions here. I don't think we'll see the insane growth that we have, but is this going to be a correction? Will we see a sharp decline in property? And even if we did see a 10 or 20% fall, it's not going to mean it's affordable, guys. Anyway, check out this last video I did just about millennials having it harder to buy property than previous generations. Check it out, guys. I mean, we do have some advantages. Take care, and I'll see you all in the next episode. Bye for now.